อย่าตกใจนะครับให้ลุกจากที่นั่งและรีบเดินไปยังทางออกฉุกเฉินเพื่อไปยังบันไดหนีไฟทันทีครับ
ถ้านั่งอยู่ด้านซ้ายของเวทีแถว S ถึง S แบบผมเราออกประตูด้านหน้าทางซ้ายไปยังประตูหนีไฟทางด้านหลังเวทีและเดินลงไปถึงชั้น1ครับ
แต่ถ้าคุณนั่งอยู่ด้านขวาของเวทีแถว S ถึง S แบบนี้นะคะเราจะออกประตูด้านหน้าทางขวาเดินไปตามทางไปยังประตูหนีไฟที่อยู่ติดกับห้องน้ำหน้าประตูทางเข้าหอประชุมนะคะแล้วเดินลงไปถึงชั้น1เช่นกันค่ะถ้านั่งอยู่โซนด้านหลังแถว A ถึง G แบบนี้ให้เดินออกทางประตูหลักทั้งสองข้างแล้วไปยังประตูหนีไฟที่อยู่บริเวณทางเชื่อมอาคาร B และ C และเดินลงไปที่ชั้น1ค่ะ
กรณีเกิดเหตุฉุกเฉินประตูหนีไฟจะปลดล็อกโดยอัตโนมัติแต่หากระบบอัตโนมัติไม่ทำงานให้เปิดฝาและกดแผ่นกระจกให้แตกประตูจะปลดล็อกนะครับ
จำไว้นะครับหากเกิดเหตุเพลิงไหม้อย่าตกใจมีสติลุกจากที่นั่งและปฏิบัติตามที่เราแจ้งไว้นะครับทางออกฉุกเฉินมีทั้งสิ้น3ทางเมื่อเดินลงไปถึงชั้น1แล้วให้เดินไปทางถนนรัชดาภิเษกและเลี้ยวซ้ายไปยังจุดรวมพลหน้าอาคาร AIA ที่อยู่ติดกับอาคารตลาดหลักทรัพย์นะครับ
ระบบป้องกันและระงับอัคคีภัยของอาคารนี้ได้มาตรฐานแต่เราก็ต้องพร้อมไว้เสมอเช่นเดียวกันค่ะสุดท้ายนี้อย่าลืมปิดเสียงโทรศัพท์มือถืองดการคุยเสียงดังและงดรับประทานอาหารและเครื่องดื่มทุกชนิดในหอประชุมแห่งนี้นะคะ
ตำแหน่งห้องสุขาที่ใกล้อยู่ตามผังนี้และอย่าลืมประทับตาบัตรจอดรถให้เรียบร้อยก่อนกลับครั้งหน้ามาร่วมงานแนะนำการเดินทางด้วยรถไฟฟ้าใต้ดินสถานีศูนย์วัฒนธรรมทางออกประตู3นะคะ
และนี่คือทั้งหมดของคำแนะนำจากพวกเรานะครับด้วยความปรารถนาดีจากพวกเราชาวตลาดหลักทรัพย์แห่งประเทศไทยสวัสดีครับ
Good morning, everyone, and welcome to CFA Institute Research Challenge in Thailand, final round. My name is Suthirat Hongtong, and I am the Senior Society Manager of CFA Society Thailand and Research Challenge organizer. The Research Challenge is a global equity research competition among teams of students organized by CFA Institute and CFA Society Thailand. Each year, more than 1,000 universities from around the world participating. For the local round this year, we have chosen Plan B Media Public Company Limited as the subject company for the competition. We have 16 teams from 11 universities participated in the global equity research competition this year, but only 4 teams that scored the highest in their research report and presentation made it to this final round today. We're looking for a team that not only has a strong writing skills, but has the ability to present their analysis to the audience and answer challenging questions. At the end of today's event, we will be selecting the best team that will represent Thailand in the regional round and potentially global rounds. On behalf of CFA Society Thailand, I would like to extend a special thank you to our main sponsors, including Bloomberg, InnovestX Security Company Limited, Kietnakin Patara Securities Public Company Limited, and the Stock Exchange of Thailand for their support throughout these 5-month competitions and made this research challenge possible, including all CFA shareholders who volunteer as mentors, graders, and judge. Your contributions have allowed us to provide a valuable learning experience for the participants and acknowledge their hard work. Before we begin our final round, let's give a warm welcome to the President of CFA Society Thailand, Kun Win Prompat, for an opening speech. Please welcome.
Good morning, ladies and gentlemen. It's my pleasure to welcome you to the Research Challenge this year. Today marks the 14th anniversary of the CFA Institute Research Challenge in Thailand. And we have this year 16 teams from 11 universities participating. The presentation that you'll be seeing today was the combination of 5 months of research, interviews with company management, clients, and presentation training. This is the Research Challenge, the first one after the pandemic. And we are happy that we are able to host the event on site and open to the public as well. Today, we will witness each team's best work or analysis and buy, sell, or hold recommendation on Plan B Media Public Company Limited to a panel of distinguished judges from investment community. Regardless of the result today, please be proud of the fact that you have the power to rise above any situation and deliver the best results no matter the circumstances. I hope what you experienced during the Research Challenge in the past 5 months offers you the glimpse of the financial industry and your future career. Who knows, there may be some recruiters in this room today, so be mindful of that. I wish you all good luck and continue to achieve what you aim for in the future. We are looking forward to seeing you all becoming a professional in our industry, and maybe one day you join us, the CFA Institute Network, and becoming a CFA charter holders. I wish to express my most sincere gratitude and appreciation to our CFA charter holders who volunteer as mentors, graders, and judges to support this competition, including our Research Challenge chairperson, Kunod Pasawut, organizer, and staff who successfully coordinated and executed this competition. Thank you.
Thank you, Kun Win Prompat, for your inspiring welcome. Please be informed that we are now live stream our event on Research Challenge in Thailand Facebook page. You are welcome to share this moment on social media with your circles, so please spread the word. Next, our final round moderator, Kun Nattaya Phutta Santitham, will now go over the rules and introduce you to our judge. Please welcome.
Good morning, judges, CFA board members, professors, Research Challenge finalists, and our guests. I'm Nattaya, and I'll be your final round moderators. Today, the 4 final teams will present their analysis to our panels of judges who will score their presentations. The team with the highest presentation score will be the winner and will represent CFA Society Thailand in the sub-regional round. Before I begin, I would like to introduce our esteemed judges who are highly respected financial professionals in Thailand. They include, first, Dr. Andrew Scotch, CEO of A. Scotch Investment Research and former president of CFA Society Thailand. Second, Khun Supachak Ngamlak, Head of Managed Solutions, Kiat Nakin Pathara Financial Group. Third, Khun Sen Kan Borisut, Investment Director at Aberdeen Asset Management and CFA Society Thailand Board of Directors. Fourth, Khun Pachalachai Puttikul Sathit, Senior Investment Analyst at NT Asset, covering ASEAN and key focus on Thailand and Vietnam markets. And last, Khun Pasawut Vilai Niran, Assisting Managing Directors in OSX Securities, CFA Society Thailand Board of Directors, and Research Challenge Chairperson. They are all volunteering their valuable time for our events today. Now, let's go over the rules for the presentations. Each team will have a total of 10 minutes for their presentations and another 10 minutes for the Q&A with the judges. When there is 1 minute left, the team will see a time reminder sign, and I will signal you when the time is up. The same rule also applies to the Q&A sessions. I'll be sitting over there at the front bench to show the signal sign for the team. We will also allow 3 minutes after the Q&A sessions for the judge to provide feedback for future improvement. This section is not a part of your presentations and will not be scored. To ensure unbiased judgment, the teams will be referred to by their assigned alphabet, not their university names. We ask that everyone in the audience not review the university names during the presentations. To minimize distractions for the presenters and judges, we request that everyone in the audience keep voices low during the presentations and minimize your walking in the room. Please also make sure to turn off your mobile phones. เพื่อไม่ให้เป็นการรบกวนผู้เข้าแข่งขันและคณะกรรมการทางสมาคมขอความร่วมมือทุกท่านในการงดใช้เสียงปิดเสียงมือถือและลดการเดินเข้าออกจากห้องระหว่างพรีเซนต์นะคะ และเพื่อให้การตัดสินเป็นไปอย่างยุติธรรมทีมพรีเซนต์ทั้ง4ทีมจะใช้ตัวอักษรแทนชื่อมหาลัยจนกว่าผลตัดสินจะออกจึงขอความร่วมมือทุกท่านไม่ให้แสดงสัญลักษณ์ของมหาลัยระหว่างการแข่งขันค่ะ It is now time for the first presentations. We would like to ask all participating team to leave the room except for Team A. After you finish your presentations, you're welcome to stay and watch other presentations. So let's get started and wish the best of luck to our finalists.
Hello.
You can start whenever you're ready. We will start the time when you begin presenting.
Weather is digital clutter, cookies decline, low effectiveness, a loss of trust. Standing right here, we must admit the digital media era is now declining. But today, we introduce you with the only firm that can tackle this problem, the only firm that is a pure player in out-of-home, called Plan B. Good morning, honorable audience. Plan B comes with the 4 key catalysts of first, newest curve in engagement marketing. Second, market leadership. Third, ESG premium. And lastly, strong balance sheet. All these to the target price of 10.6 baht per share and 11% upside. With a strategy of acquisition and diversification, its revenue can be broken down into out-of-home media and engagement marketing. Now let's see what industries look like.
In the midst of Thai economy recovery, relies on the returns of tourists and the upcoming election, we expect out-of-home to gain the most benefit and can thrive during the digital boom. This can be seen from out-of-home advertising expenditures that align with online and can surpass TV, which is the mainstream of traditional media. We believe out-of-home to review its outstanding performance with 90% of consumers return to spend time out-of-home 6 to 7 hours per day, which even higher than before COVID. And this is even noteworthy given the recovery of ridership from mass transportation and expressway that reached 84 and 80% of pre-COVID level. This will draw the attention of advertisers to shift their advertising budget to out-of-home. Moving to engagement marketing, it is showing the new S-curve with Thai League rebound. After the winning of national team, it can drive the numbers of attendances for Thai League to increase by 74% from previous season. For Thai boxing, it is also in the booming with the better broadcast time at the prime times and the highest number of matches that increased from 5 to 7 matches per week. Finally, with the resumption of events in 2023, we expect T-pop to enhance the top line of industry.
Now, what about digital tactics? Plan B has 3 key drivers from internal factors, which are prime location, synchronization, and magnetic technologies. Even though VGI and Marco is the largest competitors in the market, Plan B is second to none. As Mr. Berlin, the company CEO and founder, has consolidated market, acquired Marco, and partnered up with VGI. Now, Plan B occupying 80% of market share in out-of-home media. This allows Plan B to offer a synchronization that creates 40% higher in brand awareness and bundle package that leads to 80% key message recall. Moreover, with Plan B, out-of-home media has evolved to be a smart traditional, being the first place that integrates big data through magnetic technologies, offering customers a performance indicators and audience profile with 90% accuracies. We also conduct surveys to make sure of Plan B competitive advantage. We found that 82% of the respondents recognize Plan B in prime location. 68% of the individuals agree that the most captivating sports series is Ratchanamnon World Series, and 86% of the institution satisfied with Plan B performance. Now let's move on to ESG. Plan B leads its peers in terms of transparency and waste reduction, incorporating natural conservation through day-to-day operation. Its environmental policies focus on resource saving through LED systems and 3Rs, expecting 7.5% reduction of carbon emission in 2022. Plan B has been using its media as channels to wide social campaign, which is a great opportunity to blend into audience daily journey and their social responsibilities, leading Bangkok to be a smart city in the future with 2 main projects, which are smart bus shelters and real-time traffic condition display. Not only it can fewer the traffic jam, but also increase the target audience that Plan B can offer to its customers. Industry recognition for its governance, with high disclosure scores and awards, is proof that Plan B has high management standards and transparency over its peers. As a result, ESG would add 4% premium to its intrinsic values.
So what next for Plan B? The company plan on increase the contribution of sport entertainments as they are on the growth level. Meanwhile, with an excess capacity, Plan B is ready to push forward the media usage, follow the market demand. In long run, with Plan B capability, Southeast Asia expansion is plausible with over 100 billion of advertising expenditure waiting ahead. So now let's visualize our story into the numbers. We give a revenue projection of 8.25% CAGR for the next 5 years, support with a strong comeback in out-of-home advertising expenditure, led by an increase in outdoor activity. With the higher contribution of engagement marketing, through the empowerment of Thai soft power, is expected to capture a massive inflow of tourists annually. Consequently, net profit margin will push forward from 13% to 16% by the year 2027. And this thanks to Plan B efficient capital-intensive business model, create a higher degree of operating leverage, which was enhanced further to top-line growth with ability to create a pricing premium and bottom-line profit through cost-saving program and cost synergy, which will also result in a better efficiency overall, as we project utilization rate increase covering up to 75% of growing media capacity, driving fixed asset turnover reaching 2.7 times in the next 5 years with the support from sale boost program to the bundle package and engagement marketing content. As a result, Plan B has a strong balance sheet position given high profitability, high operational liquidity, and low debt profile create a leverage opportunity for the future growth project. So now that we know Plan B is a good company, but is it a good investment?
Yes, story and number is the bridge of the good investment, supported by a rating 55-45 of the consolidated EV/EBIT multiple and sum of the part DCF to get the target price of 10.6 baht per share. Let's start with sum of the part DCF. We calculated the price per share across three businesses: media, sport, and artist management, where we forecast the revenue separately. For example, digital media revenue is calculated from media capacity multiplied by media utilization rate. We use SWOT adjusted market share as the driver to forecast the media capacity, while using out-of-home advertising expenditure to forecast the media utilization rate that align with the management guidance. Engagement marketing revenue was forecasted based on contract agreement, as well as incorporating the popularity of sport and artists from our team market survey. Moreover, the following elements were forecasted to be in line with the sales. Moving WACC was used to support the change in debt ratio during the forecasted periods. Bottom-up betas were calculated from different peer groups for different business nature and capital structures, resulting in the varying in discount rate. We assume all businesses move toward Thai long-term GDP growth rate of 3%. Now, we arrive at the DCF value of 11.3 baht per share. To support DCF, sensitivity analysis show that even a significant change in both variables, our estimations still guarantee an upside. For the other 55%, we use EV/EBIT multiple and get the implied price of 10 baht per share. Currently, Plan B is traded at the multiple level being lower than its historical average, a strong signal suggesting a buy. And after weighting both valuation methods, we get the target price of 10.6 baht per share. Now we know the stock is well valued. How about the risk management?
Starting with reduction in addicts from high inflation that can be mitigated by launching superior worldwide strategies like bundle package and synchronization. Though the probability is quite high, the peak is already past, as Thai economy is getting better, so it would take up to 133% rise in inflation to change recommendation to sell. And next, for the risk of global recession that can impact tourist number incoming to Thailand that can further impact Thai economy and addicts can be mitigated quite similarly. However, it would take up to 76% fall in Thai GDP growth and 64% fall in tourist number to change recommendation to sell. And lastly, for the risk of lease contracts being terminated by the landlords can be mitigated by pursuing long-term relationship with them and having high negotiation power, which Plan B already has. Because this impacts both revenue and target price, as you can see from the digital billboard one. To conclude our analysis, we ran 10,000 times simulation, suggesting 73% support to our buy recommendation, at a target price of 10.6 baht per share and the upside of 11%. All of these owe to the underlying catalysts of first, newest curve in engagement marketing, second, market leadership, third, ESG premium, and lastly, strong balance sheet. And now you know, Plan B is the strongest to cash on. Now is the time for out-of-home, and from today, is the era of Plan B. So don't wait. Let's turn this Plan B into your Plan A. Thank you.
So now we're open for Q&A from the judges. You have 10 minutes also.
Okay, I will start first. In the risk part, that you show that there is a lot of contract that have to be renegotiated. But the contract in the very prime location, if they renegotiate but with higher cost, how do you think it's going to affect the valuation of the company?
We expect that the cost, thank you for the question. We expect that the cost of the price of the lease or the rent can be negotiated at most with adjusted with inflation, so that the cost at most that it can increase would be adjusted with inflation.
Do you have a scenario that they increase a lot more than that, like 10 or 15%, because it's already a prime location?
Yes, we do run Monte Carlo simulation with the various variables, one of which is the rent cost. We ran 10,000 times simulation, suggesting still 73% support to our buy recommendation.
Plan B is a publicly listed company. The market has views on the stock, and you also have views on the stock. Where do you think the market is wrong?
Thank you for the question. So we assume that the market is not totally wrong, but they just don't know how to quantify the story into the numbers. And that is why currently the market underestimate the value of Plan B.
And to top on that, we also foreseen a hidden potential upside that we not yet include into our model. So as the revenue increase up to 80% of the media capacity, Plan B will have a pricing power that can increase the price and increase the bottom line growth of the company. As well as currently Plan B has a lower under leverage than peers, which allow Plan B for a financial leverage that will magnify the bottom growth of the Plan B.
I'm confused about one thing. The smart cities, isn't that supposed to, if it's a smart city, wouldn't that reduce the amount of traffic in the city? And if that was the case, would that reduce the amount of viewership on, let's say, outdoor marketing?
Thank you for the questions. So for the smart bus cities, actually is decrease the crime rate. But if you mention about the reducing the traffic jams in the Bangkok, it is about the real-time traffic condition display that have the medias and ad also in the motorways. And with this, it can both advertise the media for the customers and also reduce the traffic jams by providing the which road of the in the cities that is traffic right now.
I have one question. Actually, it's about your opening, right? Yeah, that's quite a bold opening. Right? You're saying that digital media, digital online advertising is actually in decline, and out of home will overtake it. So my question is that have you seen an evidence of this happening anywhere else in the world? And is there any evidence of this happening in Thailand currently?
Yes, we also have the evidence to support it from the Harvard Business Research that show that right now the online is struggle with the cookie declines. That's why it's lower the efficiency of online and bring the out of home to be the first choice to the customers to choose. Because out of home is the best choice that can create the real world experience. And in terms the real world experience and also lowers in terms of price. That's why we believe that in the futures with the open of the economy after the COVID, out of home will superior online in terms of growth.
I get that point. All right.
Yes.
My second question is this. Do you think out-of-home media in Thailand is overly penetrated? What is the screen per capita? You walk out on the street right now, the only place that don't have screens is actually in toilet.
Yes. Like for example, for Plan B, the audience will be able to see the screen in every 3 minutes out of home.
However, we believe that it is not overly penetrated because as we calculated from the capita, and we calculated the ceiling of the billboards to have the maximum number. However, this current number of the billboards that Plan B owns have not reached the number of the ceiling yet. So I do not think that it is overly penetrated. And Plan B calculates carefully on where the prime locations would be and where it is the most comfortable and most nourishing, the most attractive for the customers, for the target audience to see.
VGI is a major shareholder, and they also operate in a similar industry. How do you view this relationship?
Right now, VGI is one of the shareholders of the Plan B. So we consider as is our alliance, and they also give the right to Plan B to offer their products along with Plan B products. as the synchronization package and bundle package. And we believe that in terms of media, Plan B have more diversified than Plan B, than VGI, and that's why there are no needs for VGI to compete with Plan B. Yes, because Plan B have the comparative advantage over VGI.
Interesting part on value of ESG. Can you elaborate more to us? How do you come up with the incremental value in your valuation from ESG part?
So to quantify the ESG, first we use ESG scores and the survey's result to adjust to find the strength of the Plan B, then to estimate the increases in market shares and revenues. Then second, we use the coefficients between sets firms of about 500 firms to run the coefficients between CG's criteria and the WACC. Then we adjust back to Plan B scores. And with this, as a result, is lead to 1.37% higher in revenues and reductions in WACC about 0.48%. With this is add on top of the intrinsic for 4% premium.
In addition, thanks to my friend's extended research, we used ESG score as another variables to plug in into the statistical approach when we calculate the implied price for Plan B. And that would be plugged into the fifth variables, and we get the implied EV/EBIT of 40.12 times and get the implied price of 10 baht per share.
Right. So Plan B now control over 80% of the market. That's monopoly. Right? So have you seen any evidence that the company can use this monopolistic positioning to their advantage? Is there any concrete evidence of price increase or improvement in the ROE of business after the consolidation?
Yes, with 90%, with 80% of market shares, it means that right now Plan B is occupy 80% of area across countries and 90% of area across Bangkok, which means that right now all the prime locations are secured by Plan B, and this allow Plan B to be only one player that can offer the synchronization package and bundle package that have more efficiency in terms of advertising by increase 90% of why increase 40% of brand awareness and 80% of key message recalls, and along with the magnetic technologies, these technologies can solve the pain point for out of home. And we believe that with this competitive advantage, it will allow Plan B to drive its revenue.
And is there a risk of, there's a monopoly law in Thailand, right? And is there a risk that Plan B could get in trouble with that law, or is that not a problem?
Right now, currently, and as it has always been, Plan B has not violated any laws in the past. And so we believe that with the proven by 5 full city score that it has been getting in the past few years, and now Plan B has not violated, will not be violating any laws.
Now time's up for Q&A. So next we're open for a feedback session from the judges. It's gonna be only 3-minute sessions.
For me, it's a nice presentation flow, easy to grasp in the first 5 minutes, but in the valuation part, I think the slide is quite too dense, hard to follow. But the ESG part is quite good, easy to understand. Okay, so nice job.
For me, I think the presentation was well done. The only part that I struggle with is actually the speed of the presentations. Not sure I'm getting we are getting or what, but you guys talk really fast, and that's very, very difficult to comprehend all the content, to digest all the contents within a span of a couple of minutes. And I think on the Q&A, I think there are a couple of questions that you could have done a little bit better with evidence, with the facts to support your argument. That's all.
I would add in terms of the presentation, when you start, if you go on to future rounds, the audience would not know the company well. So start explaining. My advice is to give a clearer explanation of what you will talk about in 10 minutes. Maybe your last slide could be also moved to the front, just to say 10.6 baht and plan B by recommendation.
And these both are good recommendations. I think you could even have some pictures of like you in front of some of the some of the displays, so someone who doesn't understand the business at all. Also, I noticed that you said you did an 800-person survey. Did you do that, or is that someone else's survey?
We did that.
So if you did in your own independent research like that, you need to highlight it much more. Right?
Yes.
Unless if it's valuable, that's something that you're going a step ahead. So I would say you want to make sure that you highlight that. And yeah, it's a lot of information. Some of those charts in the beginning too, I couldn't read the bottom of them. So, try to reduce the amount of information, but otherwise it was an excellent presentation.
Thank you.
Okay, I think it was a good presentation. My comment is that maybe you have too many content, like many points, and I'm not really sure like what is like the most important driver. Maybe like a 2, 3, 1 that like more important than other. And I think to convince people more, you have to provide like peer comparison or more industry analysis.
Thank you.
Thank you.
Take that one as the last one. So thank you for everyone, and thank you for your presentations. You're welcome to stay and watch other presentations as well. So here's Team B. You can start whenever you're ready, and we will start the time when you begin presenting.
Okay, we're ready.
A very good morning to everyone. We are starting coverage on Plan B and an alcohol testing company with a bar recommendation. Our analysis using the DCF resulted in a target price at the 8.39 baht, representing a potential upside of 12%. There are three key factors that contribute to this recommendation. Firstly, our foam industry is expected to continue growing. Second, Plan B had consolidated the alpha market. And lastly, we expect a better gross profit margin from Plan B. Founded in 2005, Plan B Media Public Company Limited is the leading provider of the out-of-home media business with innovation, technology, and corresponding across the Bangkok and country. The company serves the need of brand reaching and appearing target customer effectively. It also diversifies its media portfolio through engagement marketing to increase additional revenue. The company core business, out-of-home advertising, could be classified into the 5 key categories, which are transit, static, digital, retail, and airport. As you see, the digital OS has the largest shares and is the main drivers of Plan B revenue. Plan B generated additional revenue through engagement marketing strategy, which further closer connection between brands and consumers. It could be classified into the sport marketing and the artist management. About the competitive positions, Plan B holds commanding position in the out-of-home industry, boasting the largest market share at 33.24%. It's established a strategic partnership with VGI, who is the second largest player in the market. As a result, the main competitions come from the other media sector that have underperformed compared to the out-of-home, with the exception of the online.
Let's look in our investment summary, leading the out-home wave, dominating the out-home space, and maximizing margins. With the boost of outdoor activities and tourist number after the lockdown, the out-home industry is projected to continue growing with an estimated 42% growth in out-home advertising spending. And also, Plan B advertising revenue is expected to increase 60% in 2022. This aligns with the growth in the global media industry that out-home is expected to continue growing, leveraging synergies with online advertising. So Plan B has become the leader of our home market through acquisition of competitors and strategic partnership. With it can expand our home network from 72% increase in capacity. Plan B can employ price differentiation due to the limited option for price advertising location and can capture a growing demand for our home advertising. So our outlook on Plan B long-term profitability is optimistic based on the consolidation of our home market lead to increased bargaining power and economy of scale, resulting in expected improvement of gross profit margin and SG&A ratio, as well as the industry high barrier to entry. So let's look at our financial analysis. We project a total revenue growth of 9.96% CAGR in the next 5 years due to the growth of advertising revenue and engagement marketing revenue. We expect advertising revenue to grow from increase in capacity and utilization rate under the assumption that Plan B can increase advertising price by 5%. For the engagement marketing revenue, we have adopted more conservative approach. We project a CAGR of 8.45% over the forecast period driven by sport segment. We also project an increase of GPM around 2 to 3% over the forecast periods, while SG&A ratio is decreasing to 13.72%. For inorganic investment in CapEx, we expect Plan B to adopt more conservative approach toward CapEx and instead focus on increasing prices and improving utilization rate to drive profitability. In regard of capital structure, we expect Plan B to maintain conservative approach, with most of capital financed by equity, consistent with historical capital structure. This makes Plan B outman's score lower than its peers.
So, in part of our valuation is based on the free cash flow to firm DCF model. We arrive at 8.39 baht 12-month target price by growing 2027 as CFA perpetually, then discounted all the firm cash flow by WACC. The terminal growth rate is based on weighted value of GDP growth and inflation rate expectation. Our WACC is 8.77%, which calculated from the cost of equity by using equity risk premium and 5-year regression beta. For the cost of debt, we use the synthetic rating approach, then incorporate the company ESG consideration through added ESG risk spread. About our target price, which is highly sensitive to several factors, including the terminal growth rate, WACC, maximum utilization rate, and change in advertising prices. Despite this, we have taken a conservative approach to ensure our projections are realistic and not overly optimistic. To support our base case, we look at bull and bear cases.
For the first scenario, we adjust individual assumption to create full bull case at 10.63 baht and bear case at 6.21 baht. For the second scenario, we use Monte Carlo to randomly adjust assumption across 100,000 trails, producing 8.47 implied price. At last, to confirm our DCF model, we use average multiple of the business model paired with Plan B forecast to final and implied price of 8.05 baht from EV/EBIT ratio and 8.34 baht for price earning ratio. Concentrating on the 4 key risks with the greatest impact to Plan B, the main operational risk for Plan B is the potential failure to increase advertising prices as intended. However, it's unlikely to happen as Plan B have a significant bargaining power from consolidating the market. The first market risk is a Thailand economic status. If the country were to enter a recession, it would likely to reduce customer purchasing power. Plan B can mitigate this risk by diversifying its advertising locations and developing its advertising formats. However, we need to note that recessions are typically temporary and Plan B's strong capital structure should help to weather the storm. The next market risk is a potential decline in OOH market share. It's considered unlikely due to advertising trends and synergy with online advertising. However, if this were to happen, there may be limited option for Plan B to counteract it. The final market risk is a natural disaster and pandemic. The pandemic had a significant impact on the industry. However, with the experience of managing the COVID-19 pandemic, businesses are better prepared to deal with similar events in the future. And nevertheless, it's important to monitor the potential impacts.
About the ESG, Plan B had established a solid framework for responsible business practices. However, it's still room for improvement when compared to international standards. In the environment per se, Plan B focusing on the energy efficiency, material waste, and carbon emission. For example, by managing resources, monitoring the brightness of display, and using the advanced technology. In the part of social, Plan B focusing on equality and diversity. Another one is communications and customer. Plan B executive team includes 2 female members of a total of 6. It has taken steps to create a responsible and ethical workspace by adopting the Global Reporting Initiative standards and becoming a member of the Anti-Corruption Organization, CFA. In the governance, which is the most important area, Plan B focusing on the board compositions, executive management, and remunerations. Plan B board directors composed of 8 members, include 3 independent directors, and each director is rated through use of metric scale. The compensation is also determined from the evaluations of KPIs and the community assessment, yet it could improve by providing more details, goals, forecasts, and impact. Overall, when compared to peers, Plan B ESG performance is commendable but could enhance transparency and provide deeper insight. In conclusions, the growing trend of the out-of-home advertising dominates as a market leader, and the variable margin for Plan B are the key drivers behind our buy recommendations. Thank you for your attention now. We welcome any question you may have.
Okay, we're now open for Q&A.
Thank you. Excellent. You were showing about the consensus price and your target price, and I'm just curious, what is it that's different? I mean, they're very close. Why are you so close to consensus versus seeing something, different from consensus?
So if we track the asset that Plan B acquired for the last 2 years, we're gonna find that the utilization rate of those assets is not that good as Plan B can do, because those assets have a utilization rate before COVID at around 60%, but Plan B is almost 80%. So we concerned that in the long run, Plan B cannot do the maximum utilization rate to be their best.
And can you show the slide that had the PE and the EBIT multiples? one of the ones, the one that had like PE and
The one that
like
we presented.
comparing all the different ones, and you calculate like an applied multiple
valuation
or
part.
implied multiple. Or,
In the valuation part, the P ratio. The one you present.
Okay, so just a second, we got like little problems.
Maybe I'll ask another questions while we're waiting. So just curious, in your valuations.
Yes, sir.
Yeah. Okay. So this one. All right.
Okay.
Go back to.
We go back to sorry, sure.
I was just, when I look at it on a PE basis, it looks, Plan B looks pretty expensive compared to the other ones there. Tell me more about the valuation that you come up with and what you think about that PE right there.
The PE one. So we think that the market like give a premium to the PE of Plan B. So when we calculate the average PE, we added more like 1 SD to cover that premium that the market gave to the Plan B.
Why are they giving the premium to the company? Have you compare when you compare the valuations with the peers? Have you also compare the operational metric, for example, the margin, the ROA, ROE, with the other peers? Does Plan B deserve to be traded at premium valuations?
Because of about the competitive in the out-of-home market in Thailand, there is no like, okay, the Plan B have the biggest market share, but the one we use is from the United States, which is like have more competitive. Like Clear Channel or Alphon, they are like the leading company OH in United States.
Okay, and that, just one quick question. Why are you using EV/EBIT, not EV/EBITDA?
Because we try to avoid the impact of the right of use asset.
What kind of industry or business advertise through Plan B? The reason I'm asking is on your assumption for a 5-year revenue CAGR of 10%.
Can you repeat that question?
What industries or businesses use Plan B to advertise?
Use advertise. Okay, so there are many like segment that use the Plan B advertise. Like for example, like the luxury brand or the like automotive.
Okay, thank you.
Can I ask about the capital expenditure of the company? How do you project those capex into your valuations? Because it seems that, from my understanding, the company invests heavily in the digital boards recently, and also in your terminal value as well.
You mean our capex projection?
Yeah. How do you project that into the valuation model?
Okay, so in the growth capex, we calculate by find the average, like how the increase in capacity in the past, how much like growth capex do they use, and the maintenance capex, we use the maintenance capex of the total capacity.
But in 2021, they have bought some company, so the capex at that year should be quite high. How do you like adjust it for the long-term valuation?
Yes, all this the only the organic one. So in the future, we think that okay, we use the average at before that they have a heavily like acquisition for the last 2 years.
So given that like Plan B is already like 80% of the market, how do you think it will grow in the future? Like the market share is like a lot already.
Okay, so but what I found is that if we compare to the Nielsen, like the last year Plan B have market share like 33%. So we think that Plan B can expand.
So how do you like classify that market share?
That they can gain the market share, right? Okay,
Yeah,
so
like how do you like count all the market share?
okay, so we project the revenue of Plan B in the future and compare to the our like the market projection, so we get the market share.
On the engagement business, it's quite different from out-of-home advertising. Can you walk through why they go into this business and also walk through the margins?
Okay, so they do the engagement marketing business because to support their primary business. If the engagement marketing like growth, the utilization rate of the Plan B asset gonna grow too, because like because they want to support their primary. Yes.
Also because of the engagement marketing is one of the main thing that Plan B doing, and also it's better to using something that Plan B was not the expertise to supporting the revenue of the main of the Plan B, which Plan B holds commanding position in this. So that's why engagement marketing should be supporting the home advertising revenue.
And I was curious when you showed the stacked bar chart with engagement marketing on top for total revenue, that I was thinking if it's kind of a small part, it should be really fast growing, but it didn't look like it was that fast growing. What do you think about the potential for the growth of this business, or is it always going to be a relatively small part, or let's say 20% or something like that of total revenue?
So we think that Plan B still focus on their primary like business is the OH, and like there's the limit that the project for example in the artist management, which is inside the engagement marketing revenue, we expected that revenue to drop 50% because there are some artists that have their contract expired and not expand their contract. So we think that revenue will drop this year.
Also for the sport marketing, which have the RVS or the Muay Thai is the main of the revenue in the sport marketing. Into this, the RVS have just only one of the stadium, so that's why it should have like a limited of the growth of the engagement marketing.
You showed VGI in the slides. How do you see their relationship with Plan B? Are they competitor, shareholder? What's your view?
Now Plan B become like the shareholder of Plan B, like to be the arm of VGI doing like the out-of-home business, and they are like strategic partner. For example, they have like done some project like Bangkok takeover that can improve their utilization rate like together. So we think that this will benefit both for the long term.
Is there any significant change in their customers base over the past couple of years? And do you think that is sustainable?
We think that okay, so in COVID, like there's like the customer change, but we think that okay, it's gonna go back to the normal, which is like the automotive, and we more of the with luxury brand, because like there's no others like advertising that can give the value to the viewer.
Have you seen that happening? Any evidence of that
Sorry, but
happening?
time's up for the Q&A. So next one is the 3-minute session of the feedback from the judges.
Smile. So my feedback is you really need to smile more, right? And second thing is you got to try to bring the energy into the Q&A session in particular, right? Otherwise, it starts to kind of fall off. So my first part was about that. I think, the one thing that you did pretty well is that for every question, you specifically addressed that question. And I think that was a good part of it. But my biggest thing is energy?
I think the presentation is good. In your first 10 pages, it's quite easy to follow. And the problem is that you kind of lack of industry analysis into your presentation. You can do more homework, like looking at to the countries that similar to Thailand and maybe more developed, like South Korea, Japan, or Taiwan. How the market out of home over there goes. You can answer the question more easily through that kind of analysis.
Right. In terms of presentation, I think the pacing of the presentation is okay. We understand what you're trying to say. You understand the content that you're trying to present, and I think that's a good part. The problem I have is actually with the content itself. Some of the analysis doesn't look right. Some of the some of the slide, sort of lack a bit of a content in there. You can have beef it up with a lot of data to support your argument. That will actually help with your Q&A as well. So so you don't have to simply talk about it. You can actually show it to the judges in the regional round, and it's much easier when they see it, right? And other than that, I think I have a bit on the valuation as well. I think your peers analysis can be improved, not just comparing it with peers, taking average, and just saying that this company deserves a premium because it's already traded on a premium. You have to explain further why it deserves to be on premium. Is it generating better return? Is it showing a better growth historically going forward? This sort of things. Thank you.
I like the slides, the formatting. My advice adding on is to relax. The second one is to treat the Q&A as a conversation. We're not trying to find out where you're wrong, or we're trying to understand the company better. So in answering questions, not only answering the question directly, which is good, but also ties into why you like the stock, your thesis for the investment.
I think I have like same comment as Patrachai that Plan B like is traded almost always on premium, right? But in the past it grew quite fast. But given your projection that it will not grow that fast anymore, so I'm wondering whether it should like deserve that premium more. So I think you need to build more cases for that.
Okay, I'll take that one as the last one for feedback. So thank you all. So we will take a 10-minute break. We have snack box provided in the reception desk. Please be reminded that food and drinks are not allowed in this hall. Yeah, so welcome back all. So before we started, I would like to remind that you're not allowed to eat inside this hall. So ขอความร่วมมือในการงดรับประทานอาหารในห้องนี้นะคะ So now let's start with Team C. You can start whenever you're ready. We will start the time when you begin presenting.
In a competitive world, brands are competing to catch the eyes of customers, suggesting that advertising is a vital tool. When TV become less popular and online ads become more and more expensive yet less effective, Plan B, a 17-year out-of-home media operator, comes to the picture, being not just a backup plan, but rather an outstanding advertising solution for business clients. Good morning, audience. Today, we're Team C. We would like to make a buy recommendation for Plan B with a target price of 10.48 baht, using DCF, implying 9.17% upside. To start with, let's dive in. What does Plan B do? Plan B is the most diversified OOH media operator with the highest network coverage in Bangkok. With 83% of its revenue derived from its core business, Plan B generated almost 6,000 million baht in the last 12 months. Its 5 OH media categories include transit, static, digital, retail, and airport. Having static and digital contribute to 84% of its OH revenue. Plan B also holds the highest market share in the industry at 34.6%, solidifying its status as a market leader with 4 key competitive edges, having highest variety of network across the country, powerful partnerships, universal service solution, and ability to drive innovations with its magnetic technology. Moreover, Plan B also diversifies its business into engagement marketing, dealing with sports marketing and artist management. This allows Plan B to fully utilize its OH media capacity as well as gain from the growth of the diversified business.
Driving towards sustainability, Plan B has been selected as a sustainable stock for 2 consecutive years, supporting its ESG performance. Starting with the environment, Plan B was able to reduce its GHG emissions by 13% and save the billboard electricity charges by 50% in 2021, thanks to the replacement of the light bulb with LEDs. Next, social. Plan B has a strong HR support system. In 2021, the company increased the training hour to increase the performance of its employees, and the company was able to increase the employee engagement rate as well. And last is governance. Plan B has a solid structure with transparent policy and practices. Nevertheless, there are still some flaws with Plan B's ESG. Starting with the environment, Plan B has a 3-fold higher greenhouse gases emission when compared to its peer, BGI. Next, social. Plan B faces employee retention issues and the company lacks gender diversity in the workforce. And last is governance. There are some concerns about its internal party management. Despite these weaknesses, the company has set goals and initiatives pledged to address the issue accordingly to ensure sustainable operations. All in all, although there are some downsides in Plan B's ESG, we believe that with the initiatives of the Plan B and the goals that it has set, it will be able to make the company sustainable in long run.
Combining the sustainable and strong business profile with these 3 investment themes, we firmly believe that Plan B is a straight plan buy. First, we have a strong outlook for future U rate. As during the pandemic, Plan B's U rate dropped to an all-time low of 28%, with an average of only 43%. This is mainly due to a drop in OOH ad spending as affected by Thai economy downturn, in which the two are highly correlated. So, as the pandemic subsides, we can see a clear U rate recovery hitting a high of 63% during the last quarter. Still, we have a reason to believe that this development is not final. As supported by the projected economic recovery, the Thai OOH ad spending is expected to reach pre-pandemic level by the end of 2024. This is why we strongly believe that the U rate will continue its recovery momentum to match the pre-pandemic average at 75.1% by the end of 2024. On top of that, going beyond the recovery, we see a sustainable growth from media capacity expansion. As historically, Plan B is able to expand its media capacity at the rate of 17% CAGR. But the thing is, the current market is so consolidated with no big players left to acquire, but the demand for OOH still grows. So what's next? Well, to answer that, we must acknowledge that one, Plan B's current dominance is still largely in Bangkok and major cities, and two, the upcountry is still packed with smaller private players. So this is why we believe that suburban expansion will enable Plan B to expand its media capacity at the rate of 11.5% CAGR in response to the market demand during 2024 to 2027. Well, Thai urbanization is constantly rising as supported by the infrastructure development such as the Eastern Economic Corridor, the Thai-Chinese Rail Project, and 30 smart cities across Thailand. All of these translates into more eyeballs, more opportunities, and more media capacity for Plan Bs going forward into the future.
Apart from its dominance in OOH, sports marketing is to fuel further growth opportunities for Plan B. As for the past few years, revenue from this sector has been pretty fluctuating, but with the three forces of full city reopening, rising soft power initiatives, and past proven success, we believe that the business will become more settled and grow moderately at 5.8%, in line with the Thai sports event industry growth rate. Not to mention the additional upside from the Asian Games and Paris Olympics, which would add tremendous boost to the revenue. And with the three key investment themes of economic revival, urbanization, and sports marketing growth, we expect a revenue CAGR of 11.76% moving forward from 2022 to 27. As for the cost, we notice a notable amount of PPE and right-of-use assets due to the nature of the firm's operation within OOH business. This results in a huge portion of depreciation expense, contributing to more than half of the total cost structure. And depreciation expense is non-cash and considered as fixed cost. It enables a high operating leverage for Plan B, magnifying the firm's margin as the sales increase. As a result, a rebound in yield rate would uplift the firm's net profit margin, resulting in a bottom line growth at 13.32%, exceeding its top line growth. Lastly, we see that the current liquidity and leverage situation of Plan B is healthy and ready for future expansion. The drop in current ratio is not a major concern because it is mainly due to the realization of current portion of lease liabilities and short-term cash burnout used for acquisitions. Moreover, the debt level is still minimal, leaving the firm flexible financing options for future expansion.
So, taking into account the growth story of Plan B, we firmly believe that Plan B should be traded at 10.48 baht based on DCF valuation with an upside of 9.17%. The valuation is based on 10.46% WACC and 3% terminal growth rate. Furthermore, in coming up with the FCFF, we also incorporate some adjustment to the current situation of Plan B to better reflect the current situation of ESG of Plan B, including an assessment upward for the SG&A per sales to reflect high employee turnover costs, as well as an assessment downward for cost of sales to reflect good energy consumption practice of Plan B. In addition to DCF, reality valuation also suggests that Plan B is heavily undervalued. And the rationale is that the target PE and EV/EBITDA of Plan B are well below the industry average and industry median, with peers like VGI and Marco, even though Plan B has a clearly better competitive positioning in the market. And this reaffirms our buy position. And here are some risks associated with the investment in Plan B. However, there are two key risks that we deem as having high impact that should be observed very closely, which are the risk of the economic uncertainty and the risk of Plan B not being able to expand into suburban areas. And thus, we incorporate these two key risks together with our assumption on sport marketing growth in order to form a sensitivity analysis. We found out that even with bad cases like of economic uncertainty hindering the yield rate, as well as little sport marketing growth, Plan B still exhibits some upside. And even with the worst case scenario of Plan B not being able to expand into suburban areas, and thus hindering the media capacity growth, Plan B only exhibits a small downside compared to the potential gain in the base case scenario that Plan B can get. And thus we can conclude that Plan B has a potential and that its risk is outweighed by its potential. Lastly, being undervalued with 9.17% upside, in addition to low risk involved in the growth stories that's based on economic revival, urbanization, and sport marketing trend, We then conclude that Plan B is indeed a straight plan buy. Thank you.
So now we're open for Q&A.
Right, I'll go with the first questions. So, just to be clear, your projection is you project the revenue to grow by 12% CAGR, 11.7% CAGRs going forward, right, for the next
Yes.
5 years. Okay,
Yes.
that's 4 times the GDP growth of Thailand. And sport marketing is actually growing just only 6%. So the main driver has to be with the core media business, right? Out of home media business. Why do you think this company can grow 4 times the amount of GDP of the country?
Okay. To answer that, I would like to break our drivers into two things. Well, the first reason is that we think that the OOH ads as a whole still holds a great potential. Well, based on the CAGR, we believe that the number is around 13 to 15% going forward. And the fact that although Plan B does have a lot of coverage already, because suburban expansion will allow Plan B to expand even more into the suburban area. So I think this is why 11.1%, 11.5% CAGR revenue is achievable from OOH.
A follow-up questions to that. So you're expanding into a less populated area, provincial area, basically. Do you think that will be as lucrative as the core business in Bangkok and vicinity? Will the expansion going forward will be return dilutive?
To answer that question, since the provincial cities right now might seem less populous, but moving forward in the future with the urban development plans, like smart city initiatives, the Eastern Economic Corridor, these cities would be uplifted and be filled with more urban population. And so it creates a more opportunities area for Plan B.
And please, if I could add on, the main customer of Plan B is an FMCG. And we think they would really benefit the mass proposition in the suburban area where there would reach more population compared to the urban. So that is why we think it could still be scalable for Plan B.
So, do you have your forecast for 2027? What is your net margin assumption, let's say, for 2027?
So in forecasting the margins, so
Okay, so basically, in forecasting the margin, first we try to forecast the cost of sales first, right? And the cost of sales, we estimate it by the media capacity growth, since the media capacity growth would be in terms of PPE and ROU, which is the cost is in form of depreciation in the cost of sales. And for the for other margin, like for the SG&A per sales, as well as the interest rate, we try to keep it into like the average of the historical cost.
Okay, and I mean, you have a lot of strong energy about this company, right? You feel really positive about this company. I'm just curious why you don't have more of an upside in your target price. What's holding you back from, a much higher upside?
Well, I think in evaluating the upside, I think it's some sort of base effect because in the past 2 weeks, the stock price has jumped up from 8.4 to 9.7 yesterday, I believe. So that price increase deleted some sort of upside, but still, even with a significant price increase, we still hold a 10% upside, which I think is a very good investment.
One last thing, you showed a GDP, you showed a relationship between revenue and GDP, right? Where did you get your forecast of GDP?
First of all, it's the correlation between its OOH ad spending as a whole and the GDP. And the GDP is retrieved from the World Bank.
You talked about ESG on governance. Can you explain or your view on the relationship between VGI and the family? How that
Can you repeat the
VGI
questions again?
so it holds 18% or 19, and the family that owns Plan B. Are they
So-
partners? Are they investors? How is the relationship?
So to repeat the question is you asked like what's the relationship between the families of the founders and the VGI, right?
Or how is the relationship?
So basically, the CEO or the founder holds around 25% of the companies, right? So like actually they just bought more like recently, I believe.
About 0.3% of the total share.
So now like the family or the founder has become like the major shareholder of the company. So which raised the concern for us that the management, the CEO holds too much power in the company because of 1/4 of the ownership belongs to the company, so he can influence like many decisions over the company. However, we believe that the practices and the policies that Plan B has done would be able to mitigate that risk.
What is the risk that VGI and Plan B may become competitors and antagonistic?
Can you repeat the questions
What is
again?
the risk that VGI as a shareholder may not agree with what Plan B family is doing and may not work together well? How do you assess this risk?
So I believe that by consolidating the companies together, the company is more shifting towards like being more OH company and focus on generating revenues and so on. And we believe that the strategic direction of the two parties are in line together. So we believe that there should not be much of a conflict, and with the policies that Plan B has in preparation, I think that it would not be much of a concern.
To add on to my colleague, we feel that the likelihood of VGI having problem with Plan B is quite minimal because the power in controlling our home media of VGI is not dependent on the company itself, but rather through the stake in Plan B and Marco. So VGI really have a benefit related to having mutual benefit with Plan B, I would say.
About the capital expenditure, how do you project those future capex into your valuation models? Because as you already project, the revenue growth is in 10-ish%, and Plan B will goes into the provincial areas. So that requires a lot of capital expenditure on that.
Yes, so it's like you mentioned, because our assumption requires more media capacity, right? So we basically forecasted, it's from the historical data, we found the PPE, media capacity per PPE, and so we just backward engineer that to have the required PPE in every period. And so we basically use that in an input to our PPE schedule, which the depreciation expense is also calculated historically from the percentage of net PPE. And so all of these are put in a schedule, and so that's why we get a capex as mentioned in the black.
About the risk, billboard regulations, how this risk will affect the valuation of the company that you mentioned? That's one of the key risks.
We believe that the regulations are not like the main key risk because Plan B has done some mitigations, like including monitoring the amendment and the legal updates of the billboard regulations, and as well that the company try to keep the billboards at a high standard to ensure the quality, that it will not cause any accidents. So that would not be really much affect our evaluations.
So, well, how you run the sensitivities in terms of the cost inflation, given the current environment of the inflation level in Thailand right now, and what do you think about their ability to pass through the cost inflation to their clients?
So as Plan B has a leadership position in the market, having most of the OH media in its hands, as well as being able to secure the strategic position, as well as having the superior technology. We believe that Plan B can actually pass down the price to the customers. And actually, the inflation hasn't really been a key factor that we are considering that much yet, because Plan B is now focusing on other customer as well. For example, luxury brands that are willing to pay a lot more.
And to add on to the cost side, because like we mentioned, Plan B cost is mainly fixed and depreciation. So we think there would be minimal effect from the cost side in case of inflation. And yeah, this is an evidence. Well, Plan B doesn't really disclose pricing explicitly, but we have come up with some sort of proxies. Well, basically we look at the historical media capacity per assets. And
Hi. So time is up. Sorry for interrupting. Yeah. So now we open for a 3-minute feedback session from the judges.
I think is you have done very good on the investment highlight part. The first two is very concise and easy to understand. The problems maybe on the ESG part is maybe quite too fast. You speak very fast, and maybe the judges cannot fully understand that. And on Q&A is quite good, direct to the questions, and you already have a lot of support in the in your presentation slides. So for me, it's very well done.
What I think the energy was really good from the start, and I think your explanation was good. I really think you should have approached the audience rather than standing far away. You know, you always want to get as close to the audience as you can. And I think that, you know, your explanations of the kind of the linkages or how you came up with things were very good, you know, related to, well, maybe how you got to the GDP, how that comes back to that, or, you know, your explanation of that stuff. So really, I think you may even want to build your presentation around those things more clearly so people can see the logic of your thought, because I think you had some good logical connections there.
Hi, good slides, good energy. I would add, you use a lot of abbreviations. If you just be aware of the audience not knowing what U rate is or OOH, but at least at the beginning, just clarify what it is, just in the context of the audience. The other point is his question just on revenue growth. I think a 5-year CAGR of 12%. That's a very bold number. If you're very confident, give support, give evidence, give your views, because that would open a lot of questions.
I think I agree with Olsen. It's good and bad, you know. I mean, your investment highlight is very clear. You know, 1, 2, 3, bam, bam, bam. So the audience, the judges know exactly what you're trying to sell here, and also it direct kind of questions into that 3 key point, right? And apparently one of the most controversial proposition that you made is actually the 12% revenue growth, right? So I think you did well when I asked about it, you know, but it could have been better in the sense that, you know, you're trying to tell us that this company is going faster, 4 times faster than the whole country. And, you know, I know they're going into provincial. I know they're going to do a lot of things, but maybe, you know, you can quantify a bit further on, you know, where is that 12% coming from? And that's on the content part. On the presentation part, I think overall, the energy is good, but it's not even. You know, you guys got to work out among yourself a bit. You know, it's kind of like, you know, like a concert where you have some very good song and, you know, rock and roll, and then you go to a sleepy ballad, you know. during the presentation. So, you know, just even it out, you know, smoothen it out. That's a good part. And I think one last thing, don't worry too much. You know, it shows in your face. And this is all about projecting confidence, right? You're confident with your 12% numbers. You know, so make sure you portray it that way. Okay? All right. Thank you.
Thank you ครับ
Okay, I
You
think
take
you,
that as the last one. Yeah.
okay, I think you have good energy and like the presentation is like easy to follow, good order flow. But like Pacharasai mentioned, I think you can, since you already have like three key points, right? You can build on that like more convincingly, I think.
Okay, thank you. So the team is welcome to stay to watch other presentation. So let's welcome Team D. You can start whenever you're ready. We will start the time when you begin presenting.
Plan B is the market leader in the growing industry. Now, it's time to switch on the lights of the billboard and initiate the buy recommendation on Plan B as our Plan A, ladies and gentlemen, with a target price of 9.15 Thai baht, representing 14% upside based on three main reasons. First, the return of out-of-home media by the tourists. And second, expanded margin from the past acquisition. And third, the strong management team securing the prime location and the upcoming events. Thai people and tourists may used to face a lot of commercial billboards in Thailand. One of them would be Plan B's product, because Plan B is the leading company that offers the out-of-home advertising channel in Thailand. In 2021, 70% of their income generated from the out-of-home advertising media business. They have both static billboards and digital screen everywhere outside. For another main revenue stream, it came from the investment in sport and artist management business. It leads to the recurring income and synergy to the main business. And if we take a look on the bigger picture of the industry, the market was continuously growth with only a few key players. It's lead to the market consolidation. Acquisition happened for 4 times in only 3 years. Meanwhile, Plan B got more strategic shareholders during the period. Next, my friend will elaborate more why we get the buy recommendation on Plan B with these 3 main reasons.
Thank you. Let's start off with the first investment thesis. The return of out-home media catalyzed by the resurgence of tourism, supporting by 2 arguments. First, more potential exposure from the return of tourism. Second, FMCG will increase their advertisement spending from the improving economy. Let's start with the first argument. Out-home media in Thailand are highly correlated to the number of tourists entering the nation. Consequently, as tourism in Thailand are returning to its pre-pandemic level, we expect to have more out-home to be bustling. This is because we believe that in this year, tourists will enter to Bangkok area as high as 26 million people, increasing the overall potential exposure to over 37 million people. Secondly, since out-home media will gain much more exposure, multinational FMCGs or fast-moving consumer goods firms will leverage from this. Currently, 36% of Plan B client portfolios are multinational FMCGs that want to gain exposure to not only locals, but also international visitors. Furthermore, with the improving economy, improving the private expenditure index to 143.5 index point, we believe locals to spend more money on necessary items, helping FMCGs to increase their advertisement budget. However, this begs the question, does Plan B have the capabilities to capitalize the return of tourism?
Thank you. And to answer this question, we then further look into the perspective of Plan B and see that this is the exact time to reap the benefits from the past investment, and the operating leverage will amplify this effect. Plan B has an aggressive investment over the past years with 2 major acquisitions, and this has ramping up its media capacity for 1.4 times, indicating ability to double its revenue without investing more in media capacity. We anticipated this trend to continue and ramping up the utilization rate to 69% in 2034. Moreover, if we take a look at the cost analysis of Plan B, we could be able to see that 70% of it are fixed costs. We anticipated this cost to be level over the forecasted period, and this is why we believe that the profit margin will be expanded to 37% by 2034. These things are the 2 reasons that we believe that Plan B has the ability to capitalize on this opportunity. The question remains, how can we sustain it? Which this has led us to the next investment thesis of the market has actually underappreciated this strong management team that allows us to secure the prime locations and events. There's 3 supporting evidence to this. They are the expertise in out-of-home media, they're conquering the prime locations, and they also have consistency in finding the events. Plan B has witnessed many market consolidation initiatives coming from other key players and ramping up its market share to 37%. And this is as a result of other key players are actually selling its out-of-home media business to Plan B, indicating them that they are the expertise in out-of-home media. Secondly, as we believe that strategic locations are scarce and are one of the key success factors in out-of-home media, we analyzed Plan B based on top 10 most congested roads in Thailand, and we see that Plan B is in every single one of these roads. Not only roads, but they also capture the tourist attractions that will attract millions of eyeballs coming from local and international visitors. Zooming out to the big picture, they also conquered the upcountry billboards as well. Lastly, this dream management team allow us to secure one business unit, which is the engaged marketing, from scratch, allowing them to ramping up the revenue contribution from 0% to 27% in just a matter of 6 years. And this is a solid proof that Plan B is a leader in every single business that they have been engaged in. All of which has led us to 3 key takeaways. Firstly, their market share will increase alongside with the revenue, and the engagement marketing will allow us to be able to create the recurring revenue. Which has brings us to the last question of, is the price right?
We project Plan B revenue to grow 6% per annum under the recovery phase and growing phase under the outlook of first, the out-of-home index expansion. Second, the increased immediate capacity from the strategic acquisition. And third, the utilization rate increase from the strong economic recovery. And furthermore, we also project the margin expansion driven by, first, the operating leverage from which gears the margin with respect to the revenue. Second, the price premium, which Plan B has high bargaining power to the customer from the strategic locations. And with a cost of capital 9.11% and terminal growth of 4%, we arrive to the target price of 9.15 baht, with representing the 14% upside under DCF valuation from the multi-stage free cash flow to firm. And this is supported by the sensitivity analysis from WACC and terminal growth of Plan B. In addition, the football field analysis also indicates that the price under DCF valuation is in line with auto valuation methods, and average PE ratio and PEG ratio also confirm that the stock is undervalued.
We have conducted a bull and bear case analysis. In our bull case, we determined the price of 11.36, a 41% upside in which Plan B fully utilized synergies between Marcos and Aquas. Our bear case suggests 13% drop from its current price. However, we believe this case is highly unlikely. Next is the investment risk. We have identified two of our greatest concerns. Start with the first one, the unrecovered economic activity, which can be mitigated by diversified asset portfolios of Plan B. Next is the key man risk, which also can be mitigated by well-successive plan for management team. The other risks were either low probabilities or low impact. For the ESG, Plan B have engaged in many ESG initiatives in the recent years to sustain their operations toward all stakeholders. Those were ensured by organizations domestically and internationally. Governance is being the most outstanding dimension here. To protect the minority shareholders, Plan B board of directors structures comply with all required regulations. Meanwhile, they have disclosed conflict of interest declarations with VGI to ensure extra transparencies. Moreover, with 24% holding from institutional investors, we expect the monitoring effect to take place and result in lower agency costs. With the right valuations, mitigatable risks, and outstanding governance, we therefore restate the buy recommendations on Plan B based on benefits from rise of out-of-home media, the margin expansion, and lastly, the best management team securing long-term goals. For the investor looking for a market leader in a growing industry, Plan B is the best investment decisions. Thank you. Now the floor is open for Q&A.
Now we're ready for Q&A.
Can I ask about your assumption? I think you have a revenue CAGR of 6% and terminal growth of 4%. Why do you think these numbers are reasonable?
May I address on the questions? Start with our revenue assumptions. Our revenue derives mainly from the media capacity multiplied by utilization rate in the out-of-home media. The main revenue growth comes from the increase in utilization rates. Meanwhile, the media cap increase along with the market, along with the industry growth.
Yeah, a follow-up to Orson questions. Your CAGRs for the revenue is 6%, which is okay, reasonable. But your EBIT, your forecast for EBIT margin, that's really intriguing. I think you forecast double, right? From 17 to 30 something.
Yes.
Perhaps you could show the slide again. So I think my question is, it's not really a question. I'm asking you to explain that. Why do you think the margin can more than double over the next 5-6 years?
Right. Thank you for your question. So allow me to address on that. The reason why we forecasted this EBIT margin is actually coming from the operating leverage the company has possessed. As we have been mentioned earlier that
most of the costs that are coming from Plan B are fixed costs, and we also anticipated this cost to be leveled, and some of them are the variable costs that might be increased alongside with the revenue. But as most of it are fixed costs, so this is why we believe that profit margin will be expanded.
Sorry, just a follow-up questions on that. So if you look at the pre-COVID level of your margin, right, it's not even 25%, but now you're forecasting 33%. Where is the additional margin expansion post-COVID coming in?
And can you show that fixed versus variable chart? Because you show that your fixed cost is coming down, but what is that? What's causing that? Is there less investment that they're making, or what is it that's causing that?
Okay, can you go to the analysis of fixed costs? The main reduction in fixed costs come from the end of depreciations of already owned billboards or Plan Bs and newly acquired acquires. Meanwhile, our fixed costs from right of use will increase along with the inflations because Plan B are partnering with their partner or landlords to control the price.
So is what you're saying is that they're not going to add more? Like a lot of times you would say, okay, that may be depreciation may be falling on the existing ones, but you're going to add more, and therefore overall depreciation is going to continue to rise as the business grows. Or is that the kind of the ending of those?
The depreciation trend will going to go down because we expect only maintenance capex to add in our depreciations.
This is I will elaborate more to my colleagues, since there is a great capital expenditure on the acquisition of Marco and the acquisition of Aqua in the 2022, and the management teams believe that under the acquisition of the strategic location in prime area of the Bangkok city is sufficient enough to leverage more and reap the benefits from the capitalization from this asset under the capital expenditure of Plan B.
Okay. And one other last question from me is, what is your amount of cash in 2027 as a percent of assets? Yeah, so you got 7.5 billion in cash relative to 11.2, 11.3. It's a huge amount of cash compared to, let's say, the current time. What are your thoughts about that?
Yeah, as of now, we as the information that we have only, you know that Plan B have the engagement marketing business, right? It is the business that events based and is one-time revenue, something like that. So as information that we have, Plan B will collect the cash as you have seen on the slide. But with this amount of cash, with this large amount of cash, they have opportunity to invest in the upcoming events in the future. So I think we believe that this large amount of cash can gain more benefit to the future of the Plan B. Thank you.
And I want to elaborate more about the investment. Currently, Plan B is focusing on the equity and cash acquisition. So there will be the less short-term loan and long-term loan for the financial institute. So the rest of the liabilities will be mostly for the operating lease, which capitalize in the operation.
Okay, since you present like the ESG section separately, so how do you view ESG and does it impact your valuation of the company?
Plan B do not really have the clearly on the environment and social, but they try to change the new technology screen that lower the electric consumption, something like that. But actually, as an analyst, we do not see the plan of the environment and social on that. But the most standing dimension here is the governance. We do not really put the ESG into our valuation, but the governance can explain that it is transparent enough in their board of director, in their management team, so the investor can trust that can invest in the company with the information that can be disclosed.
And under the good relationship with other strategic partners, we believe that Plan B can capitalize this strategic management team to go forward with the country.
I don't understand how their cost in the long run can be lower. I mean, because investment of Plan B will come from replacing existing monitor, screen, and investing in the new one to increase their media capacity. Can you elaborate more how the cost will go down while their media capacity is supposed to be like expanding in the future? Do you project more screen or actually lowering the number of the screen?
We project only the replacement of the screen in the country from ranging from the original investment of Plan B and the acquisition of Macro and Aqua.
So the number of screen is stable during the next 5 or 10 years.
There will yes, but there would be still in the decision of the management team whether to write off the asset or not, since there could be some non-functioning billboards.
When they go into provincial area, do they have to increase the number of screen for that?
We believe currently Plan B is focusing on the acquire the companies or the subsidiaries that already had the billboards over the strategic location. So we don't believe that there will be the incremental billboards further in the long run.
Quick addition to this, for example, that we have seen is the acquisition of Marco, which they are sort of having the billboards for over like 500 billboards across the upcountry areas. So these are something that they have been already invested in.
Right. A quick questions on the. I think you focus on the Plan B as a tourism play as well, tourism recovery play. So, is there any evidence in the past that their revenue or their profit or ad spending from their customer is highly correlated with the tourism?
Yes. Could you please go to 42, slide number 42?
So we have done an analysis on this, and we analyzed that the correlation of the number of tourists entering the nations and also the Plan B revenue on out-home media are highly correlated. As you can see that it is 0.777. So it means that with the COVID-19 pandemic that had happened 2 years ago, the revenue of Plan B had significantly reduced when compared to other when compared to the tourists as well.
Just one quick questions on ROE. So at the end of your projection period, 2026, 27, what's the ROE of this company?
Can you go to the slide DuPont analysis? Okay. As you can see.
Sorry, time's up. So now we're open for a 3-minute feedback session.
All right, I'll do the honors. First feedback. I think the professional, the presentation is very good, professional. I think you have categorized each sections of the presentation quite well, so it's really easy to understand, to follow. I think the data and the analysis to support your argument is also quite solid. It's it's not just numbers, but you also have hard evidence. Qualitative aspect of the argument is also quite good. I like the fact that you portray the stock into two phases. Like you have a recovery phase, and then you have the next phase of growth. that is what investors are looking for. Overall, I think it's a very good presentation. Thank you.
Yeah, I thought it was a good presentation. In particular, it was you definitely thought about the audience as, you know, we went through the presentation. You didn't overwhelm us, which we appreciate. And I think you also raised questions in the presentation, which I think was a good strategy. You know, kind of broke it up, and that was good. And then I just think, you know, you gotta watch the ratios, you know, where you're going, because, you know, just be careful not to go too aggressive. So, but otherwise, I thought it was very good.
Thank you.
Just to add your argument on out of home and the tourist return, that's your first kind of statement. So be more confident, give more supporting evidence and views. That would help. I asked my question on the terminal growth of 4%. I asked a neutral question, but if you follow Thailand, I think that's a high number. Depending on what you assume GDP growth would be for Thailand. So that's kind of, for someone who knows the country, this would be kind of a number you would have to defend strongly.
I think it's a good presentation, and in Q&A session, the team involvement is very good, very supportive from all of you members in the team. Only one part is about the cost analysis. That seems to be because as your last team now, every team project quite significant growth in revenue, but your team is quite conservative, but you aggressive in the cost reduction of the company. That's why it's raised a lot of questions here. I think it can be more supportive by the figures, and maybe you just made up some slide to explain that. It should be more clear, that part.
I think your presentation, like, you have good energy, like, but still not too excited. That's good. That's good. And you have good pace too. I think you did well on the qualitative part, like present it out clearly. But I think it's a bit light on the number. Like, the number come from, like, mostly out of nowhere. But it's good. Thank you.
Thank you, Team D. Now that all teams have finished their presentation, we're taking a short break to give time to our honorable judges to finalize the total score. The result will be announced shortly. Thank you.
วัสดีค่ะสำหรับน้องๆทั้ง 16 ทีมที่เข้าร่วม Research Challenge ที่มารับ Certificate วันนี้นะคะรบกวนให้ตัวแทนทีมสามารถติดต่อที่จุดลงทะเบียนเพื่อรับ Certificate ได้เลยค่ะด้านหน้าฮอลล์นี้เลยค่ะตรงที่น้องลงทะเบียนข้างหน้านะคะทั้ง 16 ทีมเลยนะคะ We are about to announce the winner and begin our award ceremony. All the contestants and the guests are invited to come inside the hall and take your seat. Thank you. Honorable Judge, CFA board members, professors, research challenge finalists, contestants, and our guests. I am honored to stand before you today as we come to the final stage of the CFA Research Challenge. On behalf of the CFA Research Challenge team, I would like to extend my congratulations to all of the participating teams for your hard work and dedication over the past 5 months. I know that it is not easy to balance the demand of the competition with your study and personal life. Some teams may have given up in the face of such challenge, but I am pleased to see that many of you here have continued and advanced to this route. I hope that this experience has been a learning and self-discovery journey to all of you. I would now like to acknowledge the importance of the judge who came by today to share their valuable feedback and challenging questions during this competition. Your insights have greatly contributed to the success of the research challenge. Without their commitment and wise decision, we would not get the winner for research challenge final local round. Now, I would like to invite the president of CFA Society Thailand to present a token of appreciation to our judge. Please welcome Kun Win Pompad. Please join me in welcoming our judge onto the stage to receive their tokens of appreciation. Please welcome Dr. Andrew Stark. Thank you. Next, please welcome คุณสุภจักรงามลักษณ์ Next คุณออเซนการบริสุทธิ์ค่ะ Next คุณพัชรชัยพุทธิกุลสถิต And last but not least คุณพัสวุฒิวิไลนิรันดร์ ขอเชิญถ่ายภาพรวมนิดนึงนะคะ Thank you all. So the president of CFA Society Thailand, Kun Pompad, please remain on the stage to present the trophy. And now, I would like to announce the winners of Research Challenge in Thailand, starting from the second runners-up. Please note that we have two teams for second runners-up, and the order of the announcement does not imply scoring result. And the two second runners-up go to Team Assumption University Bachelor of Business Administration. And Team Kasetsart University Faculty of Business Administration. Please come on the stage to receive your trophy. So, the first team, Assumption University, to the stage. Now I would like to invite our sponsor from Innovest X Security Company Limited to present the prize of 10,000 baht to our second runners-up. Please welcome Kun Pasawut Wirainiran. Please give a warm round of applause to Team Assumption University. And now please welcome Team Kasetsart University Faculty of Business Administration to the stage. I would like to invite our sponsor from Innovest X Security Company Limited to present the prize of 10,000 baht to our second runners-up. Please give a warm round of applause to Team Kasetsart University. All right, so the moment we all have been waiting for has arrived. So it is my pleasure to announce the winner of CFA Research Challenge for the 2022 to 2023 season. And the winner is Thammasat University Bachelor of Business Administration International Program. So the first runner-up goes to Team Chulalongkorn University Bachelor of Business Administration International Program. Congratulations. So may I have Team Chulalongkorn University come onto the stage to receive your award. The first runner-up is sponsored by Innovest X Security Company Limited for the price of 30,000 baht. Congratulations. Let's give our first runner-up team another round of applause for their incredible performance. Well done. It is time for us to celebrate our winners today. So please join me in giving another big round of applause to the winning team of CFA Research Challenge in Thailand. ทีมธรรมศาสตร์ค่ะ Advisor from Team Thammasat, please join us on the stage too นะคะ I am thrilled to announce that the winner will receive a grand prize of 100,000 baht from our wonderful sponsors, Innovest X Security Company Limited and Kietnakin Patra Financial Group. So please welcome Innovest X Security Company Limited to present the first half of the prize of 50,000 baht. And now I'd like to extend a special welcome to the Head of Managed Solution from Kietnakin Patra Financial Group, Kun Supajat Ngamlak, who will be presenting another half of the prize, also amounting to 50,000 baht. Congratulations to the winner on this remarkable achievement. Your dedication and commitment to your studies have truly paid off. We hope that you will continue to strive for excellence in all that you do, and that this experience will be a stepping stone toward even greater achievement in the future. Once again, congratulations to the winner. On behalf of CFA Research Challenge team, I would like to extend our sincerest congratulations to all of the participants for a job well done. Thank you for being a part of CFA Research Challenge. And as we come to the end of our program today, I would like to remind everyone to follow CFA Institute Research Challenge and CFA Society Thailand on Facebook to stay updated on our future events. And thank you all for joining Research Challenge, and thank you everyone for watching live. So we hope that this competition will continue to inspire and challenge future generations of financial professionals. Thank you all for coming and have a great day. Thank you.เดี๋ยวน้องๆทั้ง4ทีมอย่าเพิ่งกลับนะคะเดี๋ยวจะมีถ่ายรูปหมู่นิดนึงนะคะเดี๋ยวขอถ่ายรูปซ่อมนิดนึงค่ะOkay, so let's have a group photo with all teams. May I invite all the judge and president of CFA Society Thailand and also advisors of all the 4 teams to join us on the stage. น้องๆผู้เข้าแข่งขันทั้ง4ทีมนะคะเดี๋ยวรบกวนมาถ่ายรูปหมู่บนเวทีด้วยกันนะคะขอเชิญเลยค่ะ